Welcome back, boys and girls. It's about that time of day again here, folks. Joseph James, School of Trade, Sideways Markets. Welcome back to our nightly newsletter. Today is May 28th, 2014. We are almost out of the month of May. I can't even believe we're talking about the month of June right now. Well, nonetheless, though, got an exciting newsletter here for you this evening. Boy, markets have been a little bit funky this week, but lots of opportunities to make some profit if you've been following along with this newsletter. Here's what to expect in tonight's newsletter. First of all, gold continue its slide. Crude finally pulls back. Finally, crude pulls back for us. Now we got some opportunities for us now. And the Russell trades sideways. So we're going to talk a little bit about what happened in the markets today. Then we're going to grab the news worksheet for tomorrow. We're going to roll up our sleeves and look at some charts here this evening and get ready for tomorrow's trading opportunities. Alrighty? Now, before we jump into the trade room, before we jump into the newsletter here this evening, I want to remind you to get yourself over to sidewaysmarkets.com. If you're watching this video on our YouTube page or on any other website besides our blog, check below the video for a link that will take you right over to our blog at sidewaysmarkets.com. And while you're here, scroll down for me, and you'll see that below the video, there is a link that allows you to download all of my charts. Now, why would I spend an extra 20, 25 minutes every day in my busy schedule? Why would I do that? Well, it's really for my members. Now my students at School of Trade can download every single chart that I'm putting up in the newsletter. And you can bring it with you tomorrow to our trade room, because tomorrow morning we're going to be using those charts tomorrow morning in our live trade room as we profit in real time using this material. Now, you don't need to be a member of School of Trade to get your hands on these charts. So make sure you get over to sidewaysmarkets.com and click on that link right below that video. And then you can pause the video, get the charts out, and have them right next to the video while you're watching the video tonight. So go ahead and pause the video for me. Go below the video, click on that link, and download a copy of those charts here this evening. Trust me, you will not be disappointed. Next, I want to make sure you guys take me up on this great opportunity to see us trading live in real time tomorrow afternoon. Monday through Thursday, we open up our live trade room afternoons to non-members, to guests. And I would love to invite you to come in and trade with me tomorrow afternoon as a guest. That's right. You don't have to be a member. All right? Take me up on that offer. Click on that free pass, upper left-hand corner. And then, guys, one more thing. If you follow me down bottom here, just above my ugly mug, give me your name and your email address. And that way you can always get the nightly newsletter emailed to your inbox around 8 p.m. Eastern Time, Monday through Thursday. All right? So make sure you guys sign up for the newsletter list. That way you get the newsletter email going out every evening. I promise I won't waste your time with that. And you got to go ahead and take me up on that offer for the free pass, right? It's worth its weight in gold, or maybe worth its weight in crude oil, or Russell. We'll see. Now, all kidding aside, let's jump right in here now. Now that you know the plan here for today, let's take a look at what happened in the markets. Now, let's start out with, boy, what a breath of fresh air. 138 ticks of range today on crude, closing all the way below 103. Now, at first glance, it might be looking like, oh boy, a big sell-off coming, but not so fast. Remember, we were expecting this pullback. This is a perfect example of when we have a short-term move down, but just you wait. If you've been watching the newsletter this week or last week, we talked about the fact that we needed a pullback, and that's exactly what we're getting. So believe it or not, this move lower is actually setting us up for a very, very big, exciting move higher. Now, looking at this, though, 138 ticks. Remember, between 100 and 200 ticks of range, this is going to be typical. Below 100 is narrow. Above 200 is wide. A wide range day today usually results in a narrow range tomorrow, and vice versa. So when we see a narrow range like we saw on Tuesday, that's the reason why Wednesday's range is expected to be more right? At least a little bit larger. So 138 ticks. We close below 103. As you can see, though, here, this sell-off definitely tells us that this pullback is most likely all this is. Let's take a look at some of the technical clues that tell us what really happened today. First of all, where did we close yesterday? We closed yesterday in the middle of the range. That's a big clue because now that creates a frame of reference. Now, compare yesterday's close to today's open. Right the same price. So what does that tell me? It tells me that nothing happened overnight. Nothing changed the opinion of value from one day to the next. It tells us we were neutral on Tuesday evening. We were neutral on Wednesday morning as well. Then, now follow the bouncing ball. We opened in the middle. Where did we close? We closed all the way down at the lows. That's a very bearish clue, but it's not the most important clue that we see. The most important clue that we see is the volume. Now look closely. This thin white line on my chart extends all the way from 103.64. That's the important clue we're getting. Where is that number? Look closely. Where is it not? It's not below 103. It's not below the low from Tuesday. Look at Tuesday's low, right? There's Tuesday's low, 103.55, 103.57, whatever you want to call it. And look at the volume, just a few ticks above. What that tells me is that tells me the majority of traders today saw value in and around this 103.50 area. It wasn't until later this afternoon, possibly reacting to Obama's address at the military academy, possibly reacting to some other random news. It doesn't really matter why, but we had a nice big sell-off here. All right. My personal opinion is we had a big trend line over here on our anchor charts from yesterday, if you remember. And once we broke that trend line, it was a little bit too enticing here. Had a bunch of profit taking, and I'm sure some short sellers got involved as well. So the big clue that I see today is the fact that we have the volume up above 103.55. So that now tells me that we may have, whoops-a-daisy, slipped and fell today, but the majority of trading was done back up near the lows from last week. So this is a big deal because this big sell-off, you remember, we are expecting this to be a pullback. We're expecting this to be a pullback as it decides to then go higher, right? Remember, we projected middle of June to get back up to those 106s, 105s. So this is leading into my anchor chart, which I'm going to hold on real quick. We're going to see the anchor chart in a few moments. As you can see here, we still probably have a little bit more room to go. As we watch this thing go lower, remember, this is a window, right? It's called a gap. But in Japanese candlestick reading, the term they use is a window. And windows typically get closed. Now, you might have thought I was crazy last week when I said, just you wait, this gap will get filled. And sure enough, it did. The important levels that I see here now are going to be this 102.45. What is this? What's the high here? 102.44. So we got 102.44. Right? That's the gap low. I've got 102.26, the prior week open, and then wishful thinking here for the sellers, 101.69. That's the prior week low. Now, right now, there's not a lot on this chart that tells me we won't go to 102.44, 102.26, and possibly all the way down to last week's lows at 101.69. Those are the levels I'm going to be hunting for if these sellers continue. But hold on just a second, though, because at the end of this newsletter tonight, I'm going to show you some key levels on the anchor charts that are going to put a little bit of a different spin on this. And what we're going to be doing is we're going to be looking for one of these levels to act as the catalyst to get this party back to the upside. Now, I don't care what direction we go. All right, all I care about is making my profit just like everybody else. So hold on tight. I'm going to show you the anchor chart, and we're going to take a look at where we have some buying opportunities during this sell-off. All right, so hold on tight for that. So crude oil, pretty decent move today to the downside, and there were some awesome selling opportunities if you were with us today in the room. All righty, so there's your crude, there's your VIP chart on crude. Moving forward, now that we know more about the crude market, how about the Russell? Here's my mighty mini Russell, one of my favorite E-minis. A very narrow range today, only 93 ticks of range. We closed pretty much right where we started today. Nothing really changed. The volume stayed right in the same spot as it was yesterday. So we opened in the middle. We closed in the middle. The volume in the middle. I'm going to go ahead and say we're neutral. We're balanced. And remember, this is what happened, right? We had that big run up last Friday, OPEX Friday. We had the holiday weekend. We jumped up on Tuesday, but finished in the middle, right? We said balanced last night on the newsletter, and here we are now balanced once again. Now, on this Russell, the Russell has a little bit of a pullback we need right now. So as we go lower, if we look to sell short here right now, my most important levels here are the prior week high and the prior week close at 25.2. I've got 1109. 1100, 1096, and of course 1088.6. Now don't forget, folks, I provide all the chart templates, all the indicators, everything you see me use right now, I provide for life. We don't nickel and dime our clients. I give you guys, all my clients get every single indicator, every single chart template that we use that you're seeing in this newsletter. All right? We even go one step further and provide all the technical support, the remote setup. I'll even connect to your computer and set this whole thing up for you. That way you're good and confident when you join me tomorrow in the trade room. So balanced is the word here on the Russell. Now, hold on tight though, because again, I'm going to show you that anchor chart, and the anchor chart's going to show you where we need this price to come back a little bit here before we can start looking to do anything on the Russell. Here we are now moving to the gold. Now, gold has been a pretty active market the past 48 hours. If you remember, this was last Friday, right? That was OPEX Friday. We had that little teeny tiny range on Monday because, of course, it was a holiday. And then we had this big gap down. Now, you probably remember we just saw a gap on crude oil, right? And sure enough, that gap got filled. This gap, too, will most likely be filled as well. So don't forget, the windows always seem to be closed. And as you can see here, we are well below prior week high, prior week open, prior week close, prior week low. The most important number I have in my chart right now is going to be that prior week low, that 1286, because that's going to be a magnet, right? If these buyers happen to be able to get this baby going back up again, it's going to get right to that 79.7, 86. All right, so don't say I didn't warn you. If these sellers give up on this, or if we get a nice reversal on this, we'll be hunting for that gap to be filled. Looking at gold here, another day over 100 ticks. Now remember, we had been seeing gold move 30 ticks, 60 ticks. This is a very healthy week here for gold, right? Gold hasn't missed supper yet this week, right? It's well fed. So we've had a pretty good move down on gold. Honestly, I wasn't expecting it to go much further today. But remember, whatever I'm expecting doesn't mean anything to me at all, because that's just me speculating. It's interesting. You know, human beings like to predict. We like to anticipate. But in all reality, what my plan is every day is to come in, take a look at the price action, see what direction the trend is, and I'm going to follow that trend. Right? I really don't care what direction we go or what I think is going to happen, and neither should you. All right? So don't be surprised, right, if this thing goes back up or keeps going lower. I could care less. What I do know, though, is get a nice, strong move. We opened here. Well, first of all, we closed yesterday near the lows. Now, do you recall yesterday evening how we had volume up top here? Remember that yesterday evening? How I said that was one of the reasons why I said we may not keep pushing lower here, because we had the volume was up near the highs. Well, now look what's happened. Now I think we've converted some of the bulls over to the bear side now, because look what happened. We closed yesterday at the lows. Where did we open? We opened today at those lows. So clearly, the bulls did not get much done overnight. And clearly, the bears didn't go anywhere, right? So they stuck right with it. Where did we finish there today? We closed the day down near the lows. Little bit of profit taking you can imagine at those lows, right? You're a little bit crazy, been riding this thing down all week, not to be taking profit, at least in my opinion. And where's my volume now? Now, here's the big clue here on gold. And this tells me we will probably end up going a little bit lower here. So I've got my volume now, 1258.2. That's where the most amount of volume piled up. So we open lower. We close lower. The volume at the lows, right? This definitely ain't bullish, and it's not sideways. It's bearish. Now, this is a difficult scenario with this big move lower like this. Big drops usually equal what? Big pops. So what we're going to be looking at next is the anchor chart. And we're going to take a look at where we expect this gold to be going to and where we can look for some selling opportunities if we want to participate with it. All right? So hold on tight for that. Now that we know what happened, gold continues to tumble, crude oil pushes lower, and Russell traded sideways today. A relatively decent day. We really had some decent volume, and it was a pretty decent day today. A little bit slow at the beginning, obviously, but it sped up there nicely this afternoon. Let's get ready for tomorrow. Now that we know what the plan is today, or what happened today, now let me grab my news and let's get ready for a very busy day in the U.S. Now, I'm going to start down here. We got some minor news coming out of Japan tonight. Very, very minor news out of Japan, about 7:50 this evening. I don't expect that to be a big deal. The big news, though, starts tomorrow in the U.S. We have nothing on the European schedule, nothing besides the news from Japan on the Asian schedule. So here we are, right back to U.S. Tomorrow morning. We didn't have any major news today in the U.S., and now they're going to unload on us here for tomorrow. We've got 8:30 Red Star News. Now, GDP, just a little important. Now, I got to be honest. For the anticipation of the GDP report, it's nowhere near as exciting as the non-farm payrolls or an FOMC. Even though GDP sounds pretty good, it sounds pretty important, and it is, it's one of those news reports that very frequently get many things moving. I've never really been too much of a fan of the GDP report. And the jobless claims report, well, like I've been saying the past few weeks, our jobless claims report is just like the old housing numbers a few years ago. Nobody trusts them. Nobody cares about the jobless claims right now. Now, last week, we did have a big uptick in jobless claims. It's almost like finally the truth's coming out. But we know as professional traders that jobless claims are being skewed because rather than taking a full-time job, you've got well, if not overeducated individuals are taking 2 or 3 part-time jobs. People are leaving the workforce. They're not getting jobs. So that's why it's so skewed right now. Exactly the same reasons why the housing numbers were skewed after the big housing crumble, right? We couldn't tell the difference between a good report or a bad report. So here we are now, tomorrow morning, 2 major Red Star news that hopefully are going to kickstart this price action, and we need it. The last few days, we've had a very sluggish opening bell, haven't we, guys? If you've been in our trade room, we've really had to adapt. It's been slow early in the morning, and then it just kind of gets warmed up as the day goes. So we're not going to change that type of personality. We have to adapt to it, all right? And we talk about that every day in real time in our trade room. So come out and see me tomorrow. Then we're going to hop, skip, and jump. We get a little bit more news here at 9:45. We get the Bloomberg Consumer Comfort Index, right? Not a start event at all, so we're not going to worry about it. We're going to jump down to 10 o'clock here. We got pending home sales. Now remember, over the past few months, we've seen existing home sales, new home sales have all jumped back up. In fact, if you remember from was it last week where we had new home sales? I'm sorry, no, existing home sales last week. It was new home sales before that. If you remember, the existing home sales number showed remarkable improvement in one particular sector. What was it? single-family residences. That we also talked about last week, the fact that inventory had come back. Now, inventory usually sounds like a bad thing, but in the housing market case, you've had all these houses that have been left on kind of the ghost inventory, either on the bank's list or they're just simply not being listed for sale because the owners don't feel like they're going to be able to sell it. Now that appears to be changing. This time last week, we heard from existing home sales. We saw a big jump in inventory. We went from a 3-month supply to an 8-month supply, one of the biggest jumps in the last 10 years. And then we saw another very healthy jump in the single-family residences. Because over the past few years, we've seen a very difficult time for single-family homes. Because remember, single-family homes, that's what a mom, a dad, and 2.5 kids, that's what they buy. All right? We've been seeing what? Condominiums. We've been seeing apartment homes. We've been seeing multi-unit homes. All right? That's what we've been seeing. So that suggests a more transient, right, a short-term rentals. Single-family homes are what really gives us that finger on the pulse of the economy. Because in my opinion, when manufacturing comes back, and that's what's going to be, in my humble opinion, manufacturing is going to be what makes the U.S. economy chug along again. Right? It's what did it after World War II when my grandfather came back from war. What happened? We were building cars. We were building things for war. We were building machinery. We were manufacturing. Right? The strength of Detroit was huge for the success of this country after World War II. We're going to get back to that soon. Trust me. It's coming. All right? Think about it. All this money has gone into the what? Into the stock markets. So what's happened is we have a lot of what we call market capital right now. Well, guess what? When all these billion-dollar corporations, they're all swollen now with investment capital, right? Money that you and I invested into the stock market. Well, what are all these companies going to do with that cash? They're going to reinvest it. Now, we may not know exactly what that reinvestment into infrastructure and manufacturing is going to look like, right? For all we know right now, we could be manufacturing YouTube videos and reality TV shows, and we don't know what it's going to be yet. But we do know that something is coming. And when the manufacturing sector gets back on track, what's going to happen? Jobs, right? I'm joking around with you, right? J-O-B. They're going to give jobs. And when people have jobs in manufacturing, we're not talking about getting a job down to the Circle K at the mobile station, right? We're talking about getting a real job you can feed your kids with, a job you can fund your 401k with, a job you can buy a new home with. And that's going to now result in these pending home sales going higher. It's coming, guys. It's coming. I've been a bull of the U.S. markets for a very, very long time. I still am. Now, tomorrow morning, get off my soapbox for a second. Tomorrow morning, 10 a.m., we are going to see if what I'm saying is coming into fruition. So be on the lookout tomorrow for pending home sales among single-family residences. That's going to be a big number to watch tomorrow morning. We also have a very minor but important report if you're a natty gas trader, okay, the NG contract. I don't recommend trading natural gas unless you're an expert at natural gas. It's a very, very difficult market because it doesn't move very often except for tomorrow at 10:30. Then we're going to go down to the EIA Petroleum Status Report. Now, what was the number today? Hold on one second. I just posted it in our chat room. Okay, so we saw today at 4:30 p.m., we saw a large build. So 3.5 million barrels. Now remember, every Wednesday, unless Monday is a holiday, we usually get inventories. Monday was a holiday, so it'll be tomorrow. This evening, we heard from the API, all right? And that told us we had a positive 3.5 million barrels. Now, what normally happens is, that's going to be a leading indicator for tomorrow's report. So right off the bat here, we know there's going to be a little bit of bearishness coming into tomorrow and even this evening on crude oil because we have that news number. So we have a leading indicator tonight telling us to expect a build in inventories tomorrow, and a build in inventories is usually nothing but bearish. We then have the balance sheet tomorrow at 4:30, money supply at 4:30. Again, not a star news event. And then tomorrow, we'll be talking about this tomorrow in the newsletter. As you can see, though, back to back to back to back, we get a lot of news coming out of our friends right in Japan. All right, big changes happening in Japan right now. They were expecting that sales tax increase to do certain things, and it didn't. So a lot of stuff happening coming out of Asia. Now you know what to expect for tomorrow. Quite a bit of news on the calendar for tomorrow. Now, you ready to rock and roll? Now that you know tomorrow's news, let's start looking at the charts here. Now, I wanted to bring up a chart on gold because the chart on gold tells a great story. Now, look at this low here. Okay? Look at this low. And look at the number associated with that low. Just look here in the lower left-hand corner. What does that say? 0. That low was made on 12/31/13, literally at 12 a.m. Eastern Time. Don't ask me how in the heck that happened that way. But that's a big clue. At the end of the year, I mean, we're talking at the end of the year, like the last second of the year. Didn't get any later in the year than that. We saw the lowest point, right, in, well, today's what? Almost the 6th month of the year. It's been 6 months. So now you can see what's happened in the past 6 months, right? Gold has gone up. And this, of course, was the last few weeks, right? We had this range-bound market, this consolidation market on gold. And this is what we were talking about, right? We made a lot of money on this the last few weeks. Picking up on this range-bound market was easy, and we made a killing on it. Then here we go. Remember what I keep saying, right? Once we got to the end of that wedge, now we expect a breakout. We didn't know what direction it would go in, but clearly there's a little bit of a lull, right, in the overall geopolitical mess. Clearly traders are seeing value in prices going lower, and since gold's a safe haven market, we know that's going to correlate directly to, well, negatively, right, but directly to equities. All right, so we went all the way down to a target that we had found at 62.8. If you remember from last night's newsletter, that was one of our targets below. So we ended up getting all the way to that target. But I want you guys to see here, if this continues, where we are likely to head here. In fact, if you go even one step further and draw some symmetry, you'll notice we end up right about there. Now, it took us 15 days to get from that high. How long do we have here? What day was this? What day was this? The 15th. So that tells me that 15 more days puts us at the end of this week. Think about that for a second. It took 15 days, right? 15 days here to go from top to bottom. Another 15 days to move down into the range. So that would put us at the end of this week, right? May 30th. So be aware of the coincidences that we're seeing right now on gold. Now, as we move forward, this, of course, is a daily chart on gold. What I want you to see here next is as we move into our anchor charts. Now, we've been waiting here on gold for a retracement. We're down at the lows. I want to get us to pull back off these lows. But if we keep going lower, every new lower low we see will continue to look for those wave patterns to the short side. I have targets on the way down, 52.7, 35.5, and then there's that same number there, 1227.3 to 1206. So right now, my ideal scenario on gold is to sell short, right? We're going to follow this trend. The ideal scenario will be to sell up around these sell zones overhead. As you can see, though, we may not get that to pull back that far. So as we go lower, we continue to sell short on gold using our targets listed below. All right. And again, the perfect scenario would be if price was to retrace off these lows into the 1285, 1292 area and gives a chance to get back in on this baby as it goes lower. One last chart here on gold, and you can see here just an example of how strong this move has been. This was the target that we found earlier, right? This was that target that we had found at 62.8. As you can see, it bounced off the target and kept on going. So once again, each new lower low, I'm looking for another selling opportunity. But I would love to get this price to retrace so I can get into a trade here by selling, not at a discount, by selling at a premium. Moving forward here, from that funny yellow metal, now down to the Russell. Here's another daily chart, this time on the Rusty. As you can see here, we had projected this price to go higher here. We broke above all the key moving averages. We're seeing a lot of bullishness in the equities right now, and we just saw the bearishness coming out of gold. So definitely bullish here, U.S. equities. But we've got a pretty big problem on our hands right now if you're a buyer on the Russell. And here's the problem. We have a major sell zone overhead here, 43.6 to 58.9. Another one overhead. And of course, you got your good old all-time highs up there at 08.4. So what I'm thinking now is we've got to get through this area if we want to keep going higher. But we have a big swamp, right? We get this old bogged down area waiting for us if we can't push higher. So here's what I see can be the biggest problem for the Russell buyers right now. If we can't push higher here, if we pull back, my projection for tomorrow is to pull back a little bit. But then that puts us now what? Back into this mess we've been before. Once I get out, they drag me back in, right? Just when I think I'm out, they pull me back down. And that's exactly what I can see going to be a really difficult job here for these Russell traders going forward. Russell has an ugly chart right now. And here's another example of it. Here's my 89 anchor. Now the big number down bottom was that 78.7, right? That was that big number. That takes us back to, what was it, February? Yeah, beginning of February. So this has been a ride here off those highs, right? There's those all-time highs once again. Now, as you can see, we have a big problem here. We're running right into resistance, which means I'm expecting this price to pull back. But remember, if we get down to that 1112 area, 1112, wait a second, 1112 puts us, it puts us right here again. Now we're stuck below these key moving averages again. So we need to push higher here. If we pull back, the sellers are going to have a field day with this. And field days are a big deal, I hear. All right? Just so we're on the same page, in case you weren't aware of a field day. All right? Field days are very big deals, apparently. So we got to remember, I want to be a buyer on this Russell, but I'm borderline insane, right? If I buy right here on the Russell, they're going to lock me up and put me in one of those comfortable padded cells, right, where I couldn't hurt myself because I'm crazy. So trying to buy this thing, yeah, they'll lock you up and put you away where you can't get hurt, right? They'll take care of you. But the reality is I can't buy here. So I need to wait for a pullback. I need to wait for price to pull back. But if it pulls back, we run the risk now of being sucked into this whole ordeal down below us again. So very interesting to see what's going to happen. All right, I have a level down bottom here, as you can see, at 1112. And I'm wondering if we're going to collapse all the way back down to it. So I'm definitely looking to be a short-term seller right now on the Russell. Short-term seller, long-term buyer. And this is the big problem. Here's the big problem. Now, if you're a member of mine, you've probably heard me say this. Well, you might be hearing it in your dreams at night. How many times a day as a student of mine in my trade room do you guys hear me say, it went too high, too fast? And now what happens is, as it jumps too high, too fast, look what happens. The cloud now catches up to it. Now remember, we like to see the cloud down bottom so I can pull back to the cloud and then go higher, right? That's why a big jump up oftentimes results in a big drop back down. If you're a student with me in the trade room, we talk about kind of the perfect scenario for a pullback trade, and it doesn't say it should go fast. It wants to go at a decent pace, but not too fast. This jumped up too fast. And so now we have this big discrepancy between the two clouds. What does that mean? That means that if we get below this 1131 tomorrow, look out below. It's going to tumble. And of course, buyers will take profit. Short-term sellers like you and I are going to try to sink our teeth into this thing and short this thing as well. So it's been trading sideways here for the past 72 hours, right? Ever since last Friday afternoon. So now we got to wait and see what happens. For the buyer's sake, if we can get above 43.9, we can keep buying, right? It went right to that resistance level and pulled back. If we can get above here, we can get back to buying. Remember, I got the 58.9 overhead. Remember, guys, this is two levels, all right? Actually, two separate levels. So once I get above that level, I can buy up to the next level, all right? It's not a whole brick wall of resistance. It's two specific price levels. I just simply like to shade them in because it gives me a visual. So we've got two choices here. Well, actually, three. What would the three choices be? Scenario one, I want to get a higher high above the 45.2. Higher high above, I'm buying on the way up to 58.9. What's my second scenario? Second scenario is we mark up the high, we mark up the low, we buy lows, we sell highs, and we keep trading sideways. Perfectly fine by me. We'll make just as much money, if not more, when we have a sideways range. And then, of course, you have scenario number three, which is price goes lower. And the minute we make that lower low here, guys, it's going to happen. You're going to see this thing move very, very quickly. And, of course, we have this old trend line here. We've been talking about that the past few days. That's going to be the first support level to buy. All right. In fact, that'll be a nice juicy support level there. Around, we'll say 23 to 22. You know, we can't really be sure where that level will be until we get there. And then, of course, if we go lower, we've got the 16.9. Don't forget, members, 15.3. I've got 16.9, 10.2, 12 even, 11.04. And then we'll run right into this big trend line here. So I'm expecting to get some sort of move lower here if we don't see these buyers really dig at their heels and try to push this thing through. Because remember, just what I said earlier, if we don't go higher here, we run the risk of being sucked right back down into that 1100 area. And we remember what it was like there 2 weeks ago, right? It was nasty. So we're trying to get up here. We're trying to push a little bit higher here if we want to get long. A lower low below 31. And we're looking for the shorts. If we stay within 45 to 31, sideways, buy lows, sell highs, right? And don't fiddle in the middle. All right, guys? Now you know the plan here for the mighty mini Russell. Moving forward, last but not least, certainly not least, we have the crude oil futures. Now, the crude oil futures, you can see here, another daily chart. We've had a lot of big moves kind of out of the ranges over the past few weeks, so I wanted to show you kind of the bigger picture here. Now, remember, too, these daily charts are painting the scenario. I'm not going to use any of these levels for my intraday trading. Why? Because that 106.01 is going to be considered a range. Okay? This 106.01 resistance on a daily chart, for the most part, could be 105.85 up to 106.15, right? It's not going to be a specific 106.01. I mean, the number is 106.01, but we're not going to be looking for a trade right at 106.01, all right? Remember, this is a daily chart we're talking about. So this just sets the stage. We can see the previous up at 110.59, so that's where we come from, right? That was late August. And I want you to think about this for a second. We talked about this earlier. Was it earlier? No, it was last week. I talked about last week the fact that we had the shenanigans out of Putin, right, in Ukraine. We've got the summer driving season, and we're seeing manufacturing and housing tick up right now. Now, if my assumption is correct, let's go here from, this was from April? This low back here, yeah, that was April 18th. So April 18th, measure April 18th, which is only a month before where we are right now. 131 days between April and August, the end of August. All right? If you don't think the summertime driving season's real, guys, it really is. If not, just for a self-fulfilling prophecy. So we took 131 days. Now, project that out from this low. What's my date here? January 10th, right? We'll call it early January. So we went from the 4th month of the year to the 8th month of the year. And guess what? I can now take this and project. And look where it puts us. It puts us into the high of that channel. And it puts us to $113 a barrel. So we have a lot in store coming for the summertime and the summertime driving season if this continues the way it's going right now. And it looks like we are right on track. It looks like we're right on track. We're about 2/3 of the way, and we're about 6 months into the year. Remember, it was about, 4 to 4, so 4 months. Yep, so we're actually a little behind, right? We're a little bit behind here because that's going to be right in February. So we're a little bit behind schedule. So we have a lot of potential for this price to move higher here. Let's keep moving though. Again, you can see we've had this short-term bullish wedge, right? Definitely bullish, but you can see though, we are a far cry away from the recent lows at 89 and the recent highs at 110. So we got plenty of room to keep moving higher or lower. Moving forward here though on crude, take a look here now at the 89 anchor. This is where we have our short-term projections. Short-term projections now up to 106.56 and 108.83. So those are our short-term projections. At the same time, it would be a healthy pullback to come back to 101.36 before we go higher. So even though we're expecting higher prices here in the long term, we still can't guarantee where we go in the short term. And remember, we are definitely expecting a short-term pullback here before we go higher. So I wanted to show you in the big picture what this looks like. Because now what I want you to see is where we are right now. So zoom out for me real quick. And you can see here was that big run from earlier on in the month, right? The month of May. We get above all the key moving averages. And then if you remember, we decided last week it was going to be best for us to wait here patiently for what? For a pullback. And here we are now, right where we had planned. This was what? A week ago? Almost a full week ago. So now here we are. We're in the perfect spot here to be a buyer. I get the right combination. We've got the cloud providing support. I've got 103.10 to 102.76. And I know this is kind of ridiculous, but there are 4 different buy zones here. The last one, though, that's going to be the one that we saw off the slower time frame. Remember that? It was 101.30, I think it was. So if we can get all the way down there, we know we're in store for a big move higher. But I don't think we're going to need to go that far. I might be wrong. It doesn't matter. All I know is that once we start to push higher here, off that 103.10, once we start pushing higher, we know we got the buyers back on board, and we get the sellers exactly where we want them. So that's why I said at the beginning of the newsletter tonight, don't be so sure about this being a sell-off now. All right? This is a healthy pullback, profit taking at the highs before we go higher. At least that's what the chart tells us right now. Remember, all I can do right now is look for buying opportunities now at 103.10, 102.71, 102.29, and then my targets overhead are going to definitely be this trend line off the highs, 104.50, 105.41. So targets overhead will be the trend line. It'll be the swing high, 104.50, and then 105.41 for your runner target. I've also got two more up top there. Targets at 105.41, 106.16, and 106.51 if you're following along at home. So we got you right where we want you, Crude. Now let's see if these buyers grab a hold. That's what we've been waiting for since last Friday. Guys and gals, I want to thank you so much for being a part of tonight's newsletter. As you can see, we really strive to make this experience a very successful one for everybody involved. If you found value in tonight's newsletter, please take a moment to share that newsletter with a friend. And don't forget, head on over to SchoolOfTrade.com and join our free trial. Our free trial is the very best in the business. You're going to learn more in our free trial than you will in most other paid mentorship programs. I guarantee it. And check out information about our beginner, intermediate, and advanced memberships. We never charge monthly payments. I don't believe in that for new traders. And we have the very best trade room on the planet. Guys, I thank you so much for being a part of the trade room today as a student, being a part of our newsletter here this evening, and I will see you guys tomorrow, Thursday evening, as we wrap up a very, very busy week. Signing off now from our corporate headquarters in Los Angeles. Got to give a shout out to our Los Angeles Kings, about to wrap up the old Blackhawks tonight, hopefully, crossing my fingers on that. Would love to bring another Stanley Cup back to LA. Born a Bruins fan, married into an LA Kings fan family. What can I say, right? Best of both worlds. Have a great evening, guys. We'll see you guys tomorrow, 8 a.m. Eastern Time in the trade room, 8 p.m. Eastern Time for the newsletter. Adios, amigos. Bye-bye for now.